Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, we are going to talk about volatility in these markets as we head closer to the election and what we can expect. Let's dive in.
Trade Genius.
All right, Bob, we got some today's an interesting one because we got to talk about VIX, the volatility index, and also the seasonality of an election year.
Yeah, you ever slide on oil that's been covered with sawdust? That's what the volatility is telling us. Let's start the chart up right away. Okay, if you're long the market, you don't want to see a VIX futures curve look like this, Phil.
Yeah, what is the term structure for the folks?
The term structure is basically looking at all of the future contracts. I think this goes out 12 months. And so each one of those dots represents a contract month ending. And so typically with the volatility index is that you slide up higher and then every month it should be higher than a month prior. But when you have this situation that's starting in October into December, that's what they call backwardation. And so you don't get the free ride of a contract roll, which means that it's just another, sugar high that you don't get when you trade the markets. They like to crush the volatility, so you basically it's a signal to take on more risk. So we have this move now here where we're going to get this good guy from August and September. We're going to show you a chart that agrees with that. But most of these contracts try to keep a 1 month equal weighting out into the future. So as we get into August, we start running into this backwardation problem with these September and October contract and October and November contract curves. And you lose your momentum. It's just like running out of fuel and you have to glide.
So basically long volatility from here on out for a while.
Yeah, so you have long volatility, and typically what they're able to do here, that contract September and October, that contract roll still gives them a good guy. Okay. But if you start bending that curve flat or bending over like this, then it becomes a headwind to the markets. And so you just can't look at the next month. You have to look at the next 2 months. And that's when we start running into risk. Okay. So, and it ties into your seasonality chart. This is setting up perfectly on the seasonality, Phil. You're basically higher volatility into the election. And then you get a massive vol crush coming out of the election, which then people are taking off their hedges, which usually promotes market growth. And it all depends on how the market's reacting ahead of the election, what kind of good guy you're going to get on that. Remember, we saw when Trump got elected the first time, once they realized he won, the market sold off for a short period of time, and then it just rocketed because everybody was so hedged against the worst case scenario. And then it ties into this third chart here. And this third chart has been playing out pretty well. That dip 2%, but the market was down more than that in general. So we're going to probably have a pop here coming out of the Fed meeting, and then we're going to chop. We're probably going to roll over to third and fourth week of August a little bit, and then it's really dealer's choice, Phil. Do we just fall from the mid-August area and dump, and then my scenario plays out, or do we try to push again and make a new high? I think we're not going to make a new high in August and September, and I don't think we're going to make a new high in the end of the year, but I do think we're going to get a pretty significant market correction. They say there's still $25 to $100 billion worth of selling in tech that's still scheduled to happen here soon, and I think that's gonna put a lot of pressure on the indexes because it affects the Mag 7. I'll throw the floor to you. Everybody, is Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, I think we're setting exactly up for seasonality here. I think that, even down to the dip that we've gotten here in July, we have the FOMC meeting on Wednesday, and that could be the catalyst for this seasonality move up into August. A lot of times when we get a dump into the FOMC meeting, it acts like a pivot, and we see a pretty strong move out of it, especially if they're going to be dovish. And I think the market really is trying to figure out where the next rate cut's going to be. There was some whispers of maybe a July rate cut. I just don't think we have the numbers there to justify it in terms of jobs and things like that. I think we still need to see initial claims higher. But if they are dovish and this market can put a better target on maybe a September cut being the most likely, then I think that's where we're going to target as far as pushing up into the market. Now, the question I have, and I think you probably agree, is that seasonally, go down into October. I don't think we have any issue with that. Are we going to get a pump to new highs after the election is my big question. Crypto could do something a little bit different, right? If Trump's going to win and he's the crypto candidate, then maybe Bitcoin's just going to be a reflection of his odds of winning. So, every time there's a poll that comes out as we get closer to that election, maybe that, it's showing that, say, Trump's winning, then Bitcoin's going to go up and vice versa. So it's going to be interesting to see because there's a lot of different things going on this time around. But that's my biggest question is, do we get that post-election pump or are we going into rate cuts? Now, Trump basically telegraphed to Powell that, he doesn't want to see a rate cut until December. Okay. Now, if that's the case, personally, I think you still have some runway for this market to continue to push up because, my opinion is that markets like to run up into the news. So if the news is a rate cut, I think you still have to give it at least some leeway that you could continue to see a bid in the market. But however, if, things are rolling over, jobs, unemployment starts spiking in the Q4 and the Fed decides to cut in September, then I think the odds of that are less likely. Actually, I think we have a meeting in November too, don't we? Yeah. So
yeah. Every 6 weeks.
So November, maybe maybe that's where it comes in at November after the election. That's tough because, it's right after the election. I don't know if they want to make a decision right at the election for, optics reasons. But, so anyway, I think I agree with the seasonality. I just don't know. We have to play it by ear in terms of that, what seasonality implies going into October to December.
Yeah, I mean, if you look at this chart, it says they're going to cut in September and you're going to get the bump and then a negative reaction. And it's just going to matter then if they don't cut in November, they cut in December, we'll get a reaction down again. Remember, equities follow the rate cuts. Equities follow the rate hikes. I mean, sometimes they make it so simple that people don't believe it. So that's why Phil's saying that they may not do it because they want to keep the Ponzi going for a while. They know once they start, they're not going to be able to stop till they get to zero. But, the good news for us is that it's fun for Phil and I to talk about this. It's good for you guys to know kind of where the bias is for the market standpoint. But at the end of the day, you just kind of got to watch it day by day at this point, because I think the easy money's out of this and they're going to make it really hard for people to make money unless you're really paying attention. So we'll help you pay attention. TradeLikeAGenius.com. Phil, thank you. Guys, enjoy your weekend. What's the rest of it? And we'll catch you on Monday.
Trade Genius.